The Reserve Bank is about to hand down its interest rate decision. It's widely tipped to keep rates on hold. The official cash rate has been sitting at a 12-year high of 4.35% since November. We have our business team on hand for the decision. David Taylor will join us with analysis from the Reserve Bank in Sydney. Alicia Barry is in the studio with me. To you in a moment, David. Let's bring in Alicia first. Is anyone expecting a move today, Alicia?
Not many. The broad expectation, as you said, Lorna, is that interest rates will stay on hold at 4.35%. When you look at money market expectations, there's a 7% chance priced in that rate will be cut today to 4.1%, but that leaves a 93% bet that rates will be on hold today. I mean, there were a handful of economists ahead of the inflation release last week that did think a rate hike was possible. One of those was Deutsche Bank. It's since dropped its expectation for a rate hike. In fact, the expectations for rate hikes really were washed away by that inflation number for the second quarter, which came in broadly in line with expectations both of the market economists and the RBA's own forecasts. Even though the underlying measure, the trimmed mean, was just a touch higher, it was enough to probably remove any pressure on the RBA to have to raise interest rates today. And of course, you couple that with the market turmoil that we have seen in the last 24 hours, and that will certainly be playing into the RBA's thinking today. No doubt Michelle Bullock will be asked a number of questions around that at the press conference. We're also going to get a read on the updated forecast from the RBA when it comes to inflation, GDP and the like from the Statement of Monetary Policy. So that will be something else that the market is watching very closely. But when it comes to rate cuts, the market has fully priced in a rate cut by December this year.
All right, Alicia, let's bring in David, shall we? Our business reporter, David Taylor, who's down there in the city. Hi there, David. So no change expecting, but perhaps you can run us through what is influencing the RBA's decision.
Yeah, good afternoon, Lorna. The Reserve Bank's in a tough position because the narrow path, as Michelle Bullock mentioned at the last press conference, had become narrower, meaning that if they hike interest rates, it risks stifling the economy and further increasing unemployment. If they cut rates, well, is that going to encourage more mortgage lending and inflation to ramp up again? So the problem, as Alicia mentioned, inflation is just a little bit too uncomfortably high for the Reserve Bank, and they need to get it back down to 2 to 3%. Now, you have got some economists, and Judo Bank economic advisor Warren Hogan is among them, saying that there is no real credible evidence that inflation is on a downwards trajectory to 2 to 3%. So if that is the case, at some point the Reserve Bank may have to hike interest rates, but just about everyone is saying that that is too much for the economy, and if the Reserve Bank just holds thought now, eventually inflation will come down. But it's looking at the unemployment rate, it's looking at the inflation rate, and as Alicia mentioned, the inflation rate that came out last week that's calmed some nerves. But they're also looking at GDP, and they're also looking at global financial markets. So it's a bit of a volatile time at the moment. I think the last couple of days on financial markets have revealed that in a massive way. But crucially, the Reserve Bank wants to hold on to the employment gains that have been created over the past 12 months. And to do that, it really can't tighten the monetary system anymore, which is why most people expect the Reserve Bank to remain on hold this afternoon.
Just quickly, David, will all of the volatility that we saw yesterday calmed down a bit today, will that play into the RBA's decision, or is the decision already made?
Look, I think it will. What traders, they've definitely spoken about it yesterday and today. There'd be no question about that, because they have mentioned that global financial markets and the ructions on global financial markets are influencing their decisions. There's no question about that. The bigger question is it going to continue? Now, traders have told the ABC today that whilst the trees have stopped falling, we're not out of the woods yet, because you had the Japanese stock market fall 13% yesterday. It's up 10% today. Lorna, that's not normal. That is not a normal market condition. And we had a reprieve, and some buyers have moved back in. But even today on the market, the movements don't have much conviction behind them. So the question that economists are asking is, what's going to happen in the weeks and months ahead with regard to financial markets? How could that affect the economy? And what's confidence like in the economy? All these things the Reserve Bank has to deliberate over, but even Warwick McGibbon, former RBA official, has said that the Reserve Bank is in a tight spot.
David, hold on one second, David. We have the announcement. Back to you in a sec. Over to you, Alicia.
As we've been discussing and as is expected, no surprises from the RBA today. The cash rate is on hold at 4.35%, where it has been since November last year after 13 rate increases from the RBA previously. I suppose a little bit of a reprieve for those having to pay a mortgage. It's not gone higher, but we will obviously take a look at the statement as we have time to do that. But firstly, I will bring in Sherelle Murphy, who is EY's Oceania Chief Economist, and she joins me now from Canberra. Sherelle, as expected.
Yes, that's right, Alicia. We've got that 4.35%. It would have been a big shock had they not, or had they changed rates today. They're obviously relatively comfortable, at least with the way that inflation is tracking. Of course, it is still too high, and they will continue to reiterate the fact that it is too high, but it's certainly coming down, and it looks like, so far anyway, in line with its forecasts.
Yeah, and so, I mean, the big question, I suppose, for people out there, when is a cut coming?
Yes, it would be good to have a clear answer to that, but I think it's still probably some way away. And that is on account of the fact that there are still some inflationary pressures in the economy, because the economy is running just that little bit hotter than supply can provide. So you do still have that slight upward pressure on prices. We're seeing that particularly in service prices and in domestically generated prices. And these are the things that the Reserve Bank will be keeping a close eye on. But of course, as the year goes on, there's lots to come, lots of changes ahead. Clearly, a number of government subsidies there will actually bring down that headline inflation number. Whether or not it actually changes the core behaviour of consumers, though, is yet to be seen. And of course, we have to look out for events such as we've seen in the last 24 hours with the volatility in markets. That will play into the Reserve Bank's thinking as well, if it were to continue. At least so far, though, it looks like a relatively temporary phenomenon, and perhaps actually an overreaction to what was weak jobs numbers in the US on Friday.
And as we were talking about a cut there, I mean, it does read in this statement as though the RBA is not ruling anything in or out yet. It says inflation in underlying terms remains too high, and the latest projection show it'll be some time yet before it's in its target range. I mean, it's still very data dependent, the RBA, isn't it?
It certainly is, and when you see such strong reactions as we did last week to the CPI, that is exactly a reflection of the fact that the Reserve Bank is saying is making it very clear that it has not made its decision yet about what the next change in rates will be. Now, we think it will be a cut, and we think it will be in 2025, but if we were to see any surprises, particularly in the CPI numbers, then it certainly could act sooner than that. It could also act later than that. We really have to watch that data as the year progresses.
And you mentioned, of course, the global market rout and the fact that perhaps the selling was overdone. But if there is real US recession fears that really take hold, it would be very hard for the RBA to ignore them.
Certainly there would be implications for us here in Australia if that were the case, but the data is just not suggesting that that is the case so far. Yes, there was weak job numbers, but there's many other indicators across the US economy suggesting that the slowdown has been relatively muted. It's been a soft landing, and that one indicator, of course, does not necessarily suggest that we're going to see some sharp moves from here. But of course, that would play into what the Reserve Bank is thinking. But again, domestic factors also will be important, and particularly the way the local inflation data looks as we go through the second half of the year.
And the RBA does have a lot to weigh up, because we know interest rates, as we've been saying for so many months, are a blunt tool. They're playing out in different parts of the economy in different ways. There is, of course, the idea that it takes, 18 months for interest rate rises to take effect, and conversely it would take the same amount of time for cuts to take effect. Is there a risk that the RBA doesn't cut soon enough?
Well, certainly the Reserve Bank wants to get its timing as close to perfect as possible, but that is almost impossible. I think from the Reserve Bank's point of view, as it looks at the economy at the moment, it will be more concerned about inflation getting away on the high side rather than perhaps on the other side. So I think it's going to play fairly cautiously, because clearly it wants to get inflation back into that target band. The longer it holds above that target band, the harder it is to get it back in, because it starts to impact expectations, the way that firms and consumers respond. So it is really, and as it has said many times, very, very focused on what's happening with the inflation numbers, and it will not leave inflation above the target band indefinitely. It's really going to want to pull it in.
Yeah, and that's really clear in this statement. Just a real final one for you, Sherelle Murphy. Money markets are pricing in a cut by the end of the year, but you don't think that the RBA will have the capacity to cut until next year?
At this stage, it looks like the economy is just continuing to boil along a little bit just that little bit too fast compared to where it can supply. And that means that the upward pressure on inflation does remain in the economy, in our view. Until the Reserve Bank is really clear that that is not the case anymore, we think that it's going to sit on rates where they are. Now, while they're higher than they've been, they're not overly high compared to many other countries or compared to our recent past. So we have to remember that this is not exceptionally tight policy, albeit slowing the economy down a little bit. So our view is that they can afford to sit where they are for some time yet, and it's probably going to be 2025 at this stage, from what we can see in the data, before that they will be actually cutting rates.
Sherelle Murphy, thank you so much. So, Lorna, it really does look like inflation's still very much the focus. The statement basically unchanged from last month, or June rather, with inflation their top priority.
Yeah, I want to go through the statement, Alicia. Thanks for that, with David Taylor. Hi there, David. Thanks for hanging around. You've had a look at the statement. What are your standouts from it?
Lorna, inflation's still a problem. We had the trimmed mean inflation, which smooths out inflation, and it was a really important figure. It was for the June quarter, and everyone was holding their breath for that, and it showed that it was coming down ever so gradually, 4% to 3.9%. Here's the thing. The Reserve Bank wants it lower than that, and perhaps even now at 3.8%. And the thing you can't escape is the fact that the Reserve Bank wants inflation between 2 and 3%, and whilst, 0.8 of 1% doesn't sound like a lot, it is when you consider we've already had 13 interest rate hikes since May of 2022. So the Reserve Bank is not happy with where inflation is at the moment. It wants to get it down to the midpoint of 2.5% by 2026. That's not guaranteed. And this statement shows the Reserve Bank is not yet confident that that will happen. So the question is it going to raise rates? Well, it hasn't ruled it out. It said it's not ruling anything in or out. The board has made it clear that a rate hike in Australia is possible in the next 6 months. That said, the very end of the statement, as I mentioned, it brought in the economic and financial markets ructions that we've seen over the past 2 days. It explicitly says it in the statement. And it's those kind of financial events that can sideswipe economies and can lift unemployment and, by default, bring inflation down. So in that respect, again, it's not ruling anything in or out. There might be a rate cut as early as November this year. That's what the market's saying is possible. So again, nothing in or out. Today, though, it's sitting pat and hoping for the best and saying at the moment we think rates should be where they are because it's restrictive enough. But that's not to say that won't change, Lorna, in the next couple of months.
David, stepping away from the world of business, if you will, Joe Public, the man in the street, the woman in the street, who's cheering today? Who's crying into their latte?
Sorry, Lorna, I can't hear you.
Can you hear me now? Have you lost me? I'll ask Alicia if David can't hear me.
I've got you back again.
I wanted to know, for the general public, who's going to be happy with this decision and who is going to potentially suffer?
Yeah, I think, look, I've got to be honest, I don't think anyone's going to be necessarily happy with it. because it's a small reprieve for mortgage borrowers. There are individuals and households and families that have a mortgage of $500,000 that reached a record earlier this week or late last week of $600,000 plus. So if you have a mortgage and you're a mortgage borrower, you're not going to be wanting to fork out another $75 if it's a $500,000 mortgage every month. So there's a small reprieve there, because people are tight. People are really feeling it across the country. Everyone's feeling it. So that is good news in inverted commas. But, households want interest rates to come down to make it easier for them, to make sure that they can, spend money on a school uniform, or they can buy the kids shoes or whatever it might be. That's still tight. They're still finding that difficult. So in that sense, state doesn't do anything for them. And at the same time, you've got retirees who perhaps are worried about the financial markets at the moment and want to put all their money in a term deposit or in cash to make sure that they can sleep better at night. And the interest rates, while they've moved up from record lows, they're not as high as they have been in the past. And if things do work in the Reserve Bank's favour and inflation comes down, well, they'll get less of a return on their term deposit. So you can't please everyone, but at the moment, I think the main message is that things could have gotten pretty nasty on financial markets. That hasn't happened yet, but also that people are worried about their own financial situation, and as much as it pains me to say it, hasn't changed in the past 10 minutes as far as the Reserve Bank is concerned, and I think a lot of people will just hold on to that.
A pleasure as always, David. Thank you very much for that. Let's finally bring in Alicia again. Any reaction so far?
Speaking of things that haven't changed, there's been a fairly muted reaction on the market because it is as expected. So the Australian share market is currently sitting up 1/3%. It was slightly higher than that before we went into the meeting, but not very much. And as for the Australian dollar, it's just a touch above 65 US cents, just essentially where it was before we didn't know that they were keeping the cash rate as it is on hold at 4.35%.
All right, thank you very much, Alicia. As does always happen, we will bring you RBA Governor Michelle Bullock and the news conference that she holds. That's at happens at 3:30, I think. Yeah, 3:30. We'll bring it to you on the ABC News channel, 3:30 Australian Eastern Standard Time. And we're also expecting to hear from the Treasurer, Jim Chalmers, in the next few minutes. Ahead of that, let's bring in our political reporter, Tom Crowley, who is in Parliament House in Canberra. Tom, hi there. So we will hear from the Treasurer in a few minutes, but this is, as Alicia, David was saying, it is as expected.
It is as expected, and I think that means that we will see, as we did last Thursday with the inflation figures, we'll see a slightly relieved Jim Chalmers. Parliament resumes on Monday, and if, as we had been thinking a few weeks ago, there was a chance of a rate hike at today's meeting, well, that would have been a political disaster quite apart from anything else for the government. So expect to see some relief, but I think probably also for Treasurer Jim Chalmers, this isn't quite as a universally good a message that he's selling today as he might have expected. There were a couple of asterisks there, of course, in what the RBA has just put out. We're obviously still getting across the details, but they pushed out that forecast for when inflation is going to get all the way back down to normal. We're looking into 2027 now before that will be the case. And talking a little bit there, the RBA, about how demand was stronger than expected. That will play into the political debate about whether the government's own decisions, such as the income tax cuts, are adding to demand, making the problem worse. That's something that some economists have been warning might be the case. It's something that the Treasurer has pushed back on. And I think last week's inflation numbers were, a pretty good sign that maybe the Treasurer had a bit of an argument there. Still, the fact that there's no rate hike today will reinforce the Treasurer's case that things are heading in the right direction, but there is just that little bit of an asterisk at the moment. The RBA still is clearly much more worried about what it calls the upside risk, the risk that inflation will stick around, much more worried about that than it is worried about economic softness, which means that it's still contemplating, tossing up a rate rise even if not deciding on it. A rate cut was certainly not contemplated at this meeting, and I didn't see, again, we're still getting across these details, didn't really see any early indication that a rate cut as soon as November or December seems to really be in evidence at all in the RBA's thinking in their statement on monetary policy and in the minutes that they've released. So some of the more optimistic predictions were pointing towards that in the last few days. It looks like Jim Chalmers and Prime Minister Anthony Albanese might be waiting a little bit longer for that all-important rate cut.
Yeah, and that will be anxious for them, because as we head up to a federal election, Jim Chalmers will want people to feel like they have got more money in their pockets, and that the squeeze on their living standards is starting to ease. I mean, he has put in various measures to try and help that, but that's what he will be hoping for, that people do start to feel better off as we head towards Christmas.
Yeah, absolutely. I mean, Jim Chalmers talked sort of even in April and May about what he called a kind of encouraging economic trifecta, where you had inflation coming down, the prospect of rate cuts on the horizon. You also had an unemployment rate that was still pretty low and wages that were growing at a reasonably good level. And his line back in April and May was, if we can maintain all of these things in line with what the RBA hopes that we can do, then, that's a pretty good set of economic conditions to head into 2025 and 2026. And then the government can start to pivot to talking about, well, how can we get the economy growing again? Where will future prosperity come from? Some of that longer lens to the economic story. That's the story the government wants to tell next. The question still remains, though, can inflation keep coming down without those broader economic numbers, such as unemployment and wages, starting to take a turn for the worse? And it's sort of a little bit frustrating. I think sometimes we want these really straightforward answers to come up from RBA board meetings or from data releases. Unfortunately, we don't always get those straightforward answers. And once again, we're in a bit of an ambiguous zone where we still have to keep in mind some of the pessimistic scenarios. It's certainly not out of the question that the RBA can get something close to the soft landing that it's long talked about, that it can get us back to target inflation without an unemployment rate too high.
Thank you very much for now, Tom. Let's go over to the Federal Treasurer, Jim Chalmers.
Paying tribute to the remarkable life and service of Tom Pritchard, the last of his generation of heroes, and by all accounts, a truly wonderful Australian. So our hearts go out to Tom's loved ones today as we mourn his passing and salute his service. Today I wanted to say a few things about the interest rates decision and also the broader global economic uncertainty that we're seeing play out around the world. As you know, the Reserve Bank Board has kept interest rates on hold at 4.35%. This is a welcome decision from the Reserve Bank because it recognises the pressures that people are under, the progress we've made on underlying inflation, but also the severe market volatility we've seen and global economic uncertainty more broadly. Australians are doing it tough enough already. The last thing they needed today was more cost of living pressure. So this decision is welcome because it recognises the progress that we've made on underlying inflation, the softness in our economy, and also that very substantial global economic uncertainty that we're seeing play out in markets around the world. We have seen some really significant volatility in those markets in recent days, and our own markets have been impacted as a consequence. The market volatility that we've seen has been driven by weaker than expected jobs growth and tech earnings in the US, as well as rising Japanese interest rates impacting Asian markets as well. Australia is not immune from these global developments. We've seen them play out in the Australian dollar and in our own share markets as well. I've been briefed by Treasury today on this volatility, and I'll be kept up to date on developments as they unfold. Our government has always put a premium on responsible economic management, and it's especially important now. We've said around budget time, before that and since then, just how important it is that we recognise the balance of risks in our economy, domestic and international, growth and inflation. And it's just as important now as it's ever been that we continue to deliver that responsible economic management, which is all about fighting inflation and providing cost of living relief at the same time as we get the budget in better nick without smashing the economy. Now, today's decision comes as price pressures in our economy continue to trend downwards after annual trimmed mean inflation moderated for 6 consecutive quarters. As the Reserve Bank say today in their statement, we have made really substantial progress in the fight against inflation, but we know that inflation can be sticky and stubborn, and they've described that in their statement today as well. Headline inflation is more persistent than we want it to be, but it's less than half its peak, and it's much lower than the 6.1% we inherited at the election. I also think that having rates on hold now since November last year provides a bit more certainty to mortgage holders and small businesses who are already under pressure. Another important point from the RBA statement today is that it forecasts that headline inflation is expected to dip below 3% in the next year due to the government's cost of living measures. They make that clear in their forecasts. We know that Australians are doing it tough. That's why the Albanese Labor government is rolling out substantial and responsible cost of living relief that helps in the fight against inflation. If you look at the inflation figures last week, the ABS made it really clear that across energy bill relief, cheaper childcare and rent assistance, we've taken half a percentage point off inflation, and they expect a similar outcome in the coming year as well. We've also delivered the first back-to-back surpluses in almost 2 decades, which the Reserve Bank Governor has said is helping in the fight against inflation. So today's decision is not a surprise. We know our economy is soft. We know that people are under pressure. We know that previous rate rises, which are already in the system, are already slowing our economy. And we know that we've made substantial progress on getting inflation down. And we see that recognised in the statement as well. Our economic plan, as I said, is all about fighting inflation and easing cost of living pressures without smashing the economy. And that's how we are doing our bit to ease the pressure on Australians through our responsible budget strategy, tax cuts for every taxpayer, energy rebates for every household and 1 million small businesses, and all of the ways that we are going about managing our economy in the most responsible way that we can in uncertain times, which we're seeing in the volatility in global share markets in recent days. Over to you.
How worried are you about that stock market volatility?
Well, the volatility we've seen in international markets has been really substantial. Part of that has been unwound in Japan today, for example, but it's another reminder of just how uncertain the global economic environment is. And we are confident about the Australian economy. We are confident we can continue to see inflation moderate. We're confident that we can continue to grow. But this is a really important warning against complacency. The fact that we've seen this kind of volatility in international markets, and also the fact that we saw a much weaker jobs outcome in the US in the first place. And so we are confident but not complacent about Australia's economic prospects. We have made substantial progress on inflation the last couple of years, but inflation is stickier and more stubborn than we would like it to be. That's why our economic plan is so important. We're getting the budget in better nick, turning big Liberal deficits into Labor surpluses. We're rolling out cost of living relief. We're doing that in the most responsible way that we can.
What are the immediate impacts?
We might just impose some order. We'll go Madeira and then we'll come back this way.
What are the immediate impacts of this volatility in the stock market for Australians?
Well, we've seen our dollar move as a consequence of what's happening around the world. People are making assessments about the US economy, the broader global economy, prospects in China, and we know that the Chinese economy has been a bit weaker of late, and that has consequences for us as well. We also saw our own stock market be especially volatile in the last couple of days, and that's because we're not immune from what's happening around the world. You know, one of the reasons why we've tried to strike a really effective balance in the 3 budgets we've delivered, and especially the third one, is because we recognise the inflationary pressures in our economy, but we also recognise there's a lot of global economic uncertainty. We've been saying that throughout the course of this year, and unfortunately we're seeing some of that uncertainty play out in global markets, and that has consequences for our markets and for our dollar.
Given that volatility, do you think, were you hoping that the RBA would have cut to ease some of that pressure, or do you think that's increasing the likelihood that they'll need to move?
Oh, look, I don't make assumptions or predictions about future movements in interest rates. There are good reasons why I don't do that. I don't preempt them before a decision, and I don't try and predict future movements in interest rates. I think one of the really good developments is that we'll shortly hear from Governor Bullock. One of the reasons I'm up so shortly after the announcement was made public was so that people can focus on the Governor's comments, which will be made shortly from Sydney, and she can explain how she sees the future. trajectory of our economy and the forecast that they have released today. From my point of view, this is a welcome decision because it recognises that people are under pressure. We've made progress on inflation and there's a lot of global economic uncertainty. And that's what today's decision recognises. You know, it wasn't that long ago that people were calling for much higher interest rates. And I think what we've seen here is a welcome outcome because it recognises that we can continue the fight against inflation without smashing our economy. That is the job of the Reserve Bank and it's the job of the government. We have different parts to play in that. We are doing our bit, getting the budget in much better nick, rolling out this cost of living help in the most responsible way, recognising the pressures that people are under and the global economic uncertainty which is playing out here as well.
When do you switch from controlling inflation to stimulating growth?
Well, we've seen throughout the course of the year that we have to balance our priorities, and our primary focus is on fighting inflation. As the Reserve Bank statement rightly points out today, we have made substantial progress, but the downward trajectory of inflation is often not in a straight line. As I've said before, it zigs and zags on the way down. It's stickier and more stubborn than we would like, particularly that last percentage point or so. And in that, we have a similar view to that expressed in the RBA statement today. So our primary focus is on fighting inflation, but we can't ignore this global economic uncertainty. We can't ignore the fact that growth in our economy is soft. Job ads are down, household savings are down, discretionary consumption was almost non-existent at the start of the year, and so we have to strike a series of fine balances. I'm confident that we have in the budgets that we've handed down, and particularly that one that was handed down in May. There are a balance of risks in our economy. Inflation primarily, but we can't ignore the challenges to growth.
Just on something else. The Queensland Premier today announced plans to launch 12 state-owned petrol stations. Do you think it's a good idea?
Well, that's a matter for the Queensland State Government. As I've said before, I really believe that the Queensland Government is doing what it can to ease and alleviate the pressures that Queenslanders are under. And state governments around Australia are going about that in different ways. But whether it's the energy bill relief or other cost of living relief being provided here in Queensland and in other states, I welcome the fact that the state governments are prepared to play a role in easing some of these cost of living pressures that people are under. You know, we don't have a similar plan nationally. We don't second guess decisions taken by state governments, but we do welcome the efforts of the Queensland Government, the Miles Government and other governments around Australia to help alleviate some of these cost of living pressures that we know people are under.
Do you think other states should follow suit?
Well, that's a matter for them.
Are there
I
any
think that the rates of having the people, the housing crisis and the housing market, already CoreLogic has come out and said they see the little shift. What's your view?
Oh, we've got big
This is
challenges.
where we leave ABC TV viewers for now. You can continue watching the Treasure on the ABC News channel.
Achievable housing target of 1.2 million homes in the next 5 years, and that's because we recognise there aren't enough homes to buy or rent in our communities, and often they're not near where the jobs and opportunities are being created. That's why it's a tribute to the former Minister Julie Collins and a big job ahead for the new Minister Claire O'Neill to make sure that these tens of billions of dollars in Commonwealth investment that we're rolling out is effective, that we're building more homes for people to rent and to buy, because the housing pipeline is not what we want it to be. We need to turn things around. You can't just flick a switch and turn things around overnight, but we've got the investment flowing, we've got the commitments, and if everybody does their bit, governments at all three levels, the industry and others, investors and others, if we all do our bit, we can hit that target. It will be difficult, but it's achievable if we all play our part.
Treasurer, the state government's plan to build, I guess, state-owned service stations is been described as a rather extraordinary market intervention. Are there any federal roadblocks that you see there or constitutional issues that might impact that? And are you concerned at all about how that plays out, I guess, on a wider scale?
First of all, not that I'm aware of. Second of all, I'm not concerned about it. As I said before in response to Lydia's question, different states are going about this in different ways. But I think when it comes to the Queensland Government and other governments around Australia, They know that their people are under cost of living pressure, the people that we jointly represent. My focus is on rolling out a tax cut for every taxpayer, energy bill relief for every household, cheaper medicines, cheaper early childhood education, a pay rise for people on awards, fee-free TAFE. We're doing our bit to take some of the sting out of these cost of living pressures. That's recognised in the Reserve Bank's forecast today. It's recognised in the ABS's data from last Wednesday. And we want to work with states to alleviate some of these cost of living pressures that we know people are under. And we welcome the efforts of states and territories right around Australia who are doing what they can to help on that front.
Treasurer, economists and some industry figures have said that this fuel intervention will ultimately increase price of fuel. Do you have any insight into how if that would be the case?
No, I mean that's not my understanding. I haven't been, seen all of the details of what the Queensland government is proposing. Obviously aware from news reports today, and there'll be no doubt a lot of commentary about it. As I said in response to your colleagues over here, I think it's a good thing that states are looking for ways to take some of the edge off cost of living pressures that people are feeling. In my area, for example, as a Queenslander with a Queensland electorate, the 50-cent fares are going to make a big difference. The energy bill relief is going to make a big difference. The Miles Labor government, Treasurer Cameron Dick and others, I think have shown a real willingness not just to understand the pressures that people are under, but respond to them. Different states and territories will go about that different ways. I've got my own job to focus on, and that's rolling out the substantial and meaningful but responsible cost of living relief that I budgeted for in May.
Just on the volatility, have you had any more details from your briefing with the Treasury about what it forecasts for our economy?
Well, the briefing with the Treasury is fundamentally about the causes of this volatility we're seeing in share markets. Obviously, the weaker than expected jobs numbers in the US are part of the story, but not the whole story. There's also issues around the impact of rising interest rates in Japan and what that means for investor sentiment in Japan and throughout Asia. We've seen some underperformance in terms of reporting of earnings in the tech sector in the US. So there's a range of factors which are feeding into this volatility. We've seen some of it unwind through the course of today in Japan, for example, but my briefings with the Treasury are to understand the sources of this volatility, to understand the consequences for us in terms of our dollar, our own markets, and any exposure of the real economy to that kind of volatility. But even before the last few days, it has been really clear to us, certainly through the course of this year, that in addition to the cost of living pressures which are coming at people from domestic sources, there is a big international element to the economic uncertainty that people are feeling, the pressures that people are under, whether it's uncertainty in the Middle East and the prospects of a wider regional conflict, whether it's Russia, Ukraine, whether it's tensions closer to home, or some of these other issues that I've run through. The global economy is a pretty uncertain place right now, and we're not immune from that. But the government has put a lot of effort into making us as resilient as we can be, getting the budget in better nick, helping people with the cost of living pressures, trying to do that in the most responsible way that we can as a buffer against some of this global economic uncertainty.
Do you have to make adjustments to government policy to keep the economy growing?
Oh, look, from budget to budget, obviously we take the most recent economic conditions into consideration. That's the normal practice. We update our forecasts when we need to. We tweak our policies when we need to. But I think what developments of the last few days have shown, what the progress on inflation has shown, is that the balance that we struck in the budget was the right one. I am confident but not complacent about the Australian economy. I think what we've seen happening around the world is a real warning against being complacent. But we've done all of the things that people would expect from us in these sorts of conditions. We're rolling out cost of living help, we're turning Liberal deficits into Labor surpluses, we're paying down debt, we're fighting inflation in a way that doesn't smash the economy. Those are the sorts of things that governments should be doing in these circumstances, and those are the things that we are doing.
So what do you say to the families who are just holding on? What's your message?
Well, to people who are doing it tough, I would say that the government is doing what we can to help in the most substantial and meaningful way that we can, but also in the most responsible way we can. You know, a tax cut for every taxpayer is a really important part of that. Energy bill relief for every household. It's because we recognise the pressures on people right now. Cheaper medicines, pay rise for people on awards, cheaper early childhood education. All of these things are about recognising and responding to the cost of living pressures that people face. And that's why today's decision is a welcome one. You know, the last thing people needed today was additional cost of living pressure. People are doing it tough enough as it is. And that's why we're rolling out this cost of living help. The government's highest priority is to roll out this cost of living help in a way that helps on the inflation front rather than hurts the efforts against inflation. And I think we see that recognised in the RBA forecast today, that the government's cost of living policies are putting downward pressure on inflation, not upward pressure on inflation. Thanks very much.